In today's video, I'm going to walk you through how I had this perfect week. You can see here, this is per each funded account. I made about $6,300, which comes out to about a $32,000 week. I'm going to go through and review how I did this while only trading for about 15 to 20 minutes per day in Asia session. So this is after you're done with work, after you're done with school, after your whole day, from about 6:05 p.m. EST to about 6:30 p.m. EST, and I'm done. And that's how I managed to do this $32,000 week. If you're wondering how I got this is $6,300 on this one account, but that's copy traded across 5 accounts. I'm going to show you guys how I took the trades, my exact biases, my thought process, and some of the trades that I actually took to hit this profit this last week. So I'm going to open up TradingView right here, and you can see I put a blue line where Asia session starts. So I'm not going to be able to show the exact trades that I took because with prop firm accounts, they tend to erase the previous day's trades, but I still have some of my markings from these days itself. So we're going to start here. We're looking at the 9th, which is Tuesday. So what I like to do is I like to look at how the New York session actually went. So this dark orange line here, this is previous day high. The yellow is our 15-minute orb. Dark orange line here, that's our previous day low. So that's kind of what we're working off of here. There's also the VWAP standard deviations, but we didn't end up using that for this trade because you can see we're well within the 2 bands here, so we're not really looking for a reversal. So here at New York Open, where we can see orb breaking out, you can see it was just immediately a short. It was a completely it was a bearish day. You can see we broke down below that previous day low, and then came back up in the afternoon before New York closed. So immediately going into this, I figured okay, we're gonna have a bearish Asia session, and I'm gonna look for a bearish trade. Wow, there's a fly really going crazy on me right now. So there was a bit of this institutional push here. We can see with our volume deltas right before New York closed, but I wasn't too concerned with that just because overall it has been ridiculously bearish. So we can see this right here is the time where Asia opened. We dipped down, guess what? Here's a lower high. It dipped back down here, which is a lower low from where we closed in New York. So I figured, okay, I'm confident that next time we have a lower high, we're going to go short again. And we're right at the white line, which is VWAP. So I figured I'm not concerned of us having a crazy pullback at any point. I feel comfortable in this range. And here's a big thing that I've been doing lately that's a little bit of a change up from what I've previously done. What I used to do is I would scale pretty slow, but I'd look for a lot bigger moves, look for like 100, 200 points. But a big thing I've been doing on the prop firm accounts now, as opposed to my live account, is I just leverage extremely heavily. So what I'll do is I'll go in with about 2, 3, sometimes 4 NQ on these $50,000 accounts, of course, given that they already have a buffer. But I'll only look for 25 to 50 points. I can find a 25 to 50 point move very easily, and I can guarantee find multiple of those in every session. It's much harder for me to rip like 5 to 10 MNQ or like 1 mini and try to catch, like 50 points to make 1,000 a day. But it's really easy to get like 25 points. So you can see here, here was our most recent higher high. It dipped down, lower high. Asia opened, a dip down, pull back to meet where New York closed. We dip back down. And here we see, right here, there is a yellow, the yellow candles are our doji candles. So you can see right here, there's a yellow candle, which shows that there's going to be a lot of rejection right there. And I believe I probably just set this out looking for a different amount of points. But I assume it was actually certainly it was this candle right here, where I entered right at the VWAP line, it seems like, and I put my stop right on top of the peak of this, because if it pushed higher than that, I figured, okay, I'm wrong, I'll accept that, I'll look for another trade later. And here I just targeted an easy like 45 to 50 points. I'm not sure exactly how many contracts I entered in with. I have different like profit targets, and the entry contracts will be a little bit different depending on some accounts. But yeah, so then I just took this easy short off of this lower high, and I didn't even get concerned with it making this lower low. That was actually almost perfectly met with the previous lower low. And just like that, This was at 7:10, so this was a little bit of a later entry for me. But still, it was literally I probably hopped on the charts at like 6:30 p.m. that day. So again, 30 minutes and I'm done. And this was just a 5-minute trade. Especially lately with the volatility we've been having, you can oftentimes get these 50-point 5-minute candles in Asia alone. So that was a super simple, super easy trade. I might have been down on the 1 minute on this, but which we can look at. Let's see how it looks there. I think that I moved this all around, but I would like to take a look at the 1 minute because I think that might be a useful thing to look at for us, especially as we're trying to learn a new system or kind of see how, so you guys can kind of compare what you guys do compared to what I've done and what I've found to be successful. If you can't load it right now just because of recording and everything, that's quite alright. I'm sure we have a lot of other examples coming up. Yeah, it doesn't seem like I'll be able to load that. But so now we'll look at the 1 minute time frame, and we're going to look at Wednesday, which was June 10th. We're going to look at this entry right here. So I don't have my actual, it just brought us right back. So it seems like here I don't actually have the exact trade that I took, but I have some of my drawings from taking that trade laid out. So again here, this orange range, this is our 15-minute orb with the institutional flow indicator. We're seeing here a very, very clear downtrend throughout the day. It broke down underneath orb multiple times, and this time it just continued until Asia. So right here, I actually remember this trade very vividly. I figured right here is previous day low. To reclose that, we're going to test below it, and then we're going to break under. And here is plenty of entries. Here it was at 410 and ended up dipping down to 28,258. So that's like 150 points. That's enough for us to get many, many entries. So here, a good thing to look at is just how New York's entire breakdown, it was super, super bearish. Let's go down to this opening candle. Right here, you can see the actual opening candle is a bright red, which is institutional volume pushing it downwards. So at this point, when we near a lot of these support and resistance points, I don't like to call them support and resistance when we're talking about previous day high, previous day low, and orb. I tend to call them points of interest. And so the reason that I do that is because you won't know what will happen at that previous day high until it hits and reacts. What you do know, we'll say previous day low for this example. What we do know is that price will target that zone. There's going to be people pushing it towards that area. Now, we're not 100% certain what it's going to do once it goes there. If it confirms below, it's going to fly down 150 points like we just saw here. But if it rejects off, who knows where it's going to go. So I like to enter and target points of interest, but I like to get out before it necessarily goes through there. So obviously, if it pushes through, you just move that take profit and you squeeze a lot more out of it. But a lot of time, it's not even necessary to take on that risk. So here, institutional volume downward. So I knew it wanted to get down below the previous day low. So you can see here it dipped. So honestly, after that institutional candle downwards, you could have entered on this like marginal retracement up here to 440, and even that down to the previous day low level. That's 40 points. That's more than enough for us to get our $1,000 a day per account, which is $5,000 a day. And as you saw from the picture before, is I shoot for anywhere from like $1,000 to $1,300 a day. Just it's super easy with like consistency rules and things like that to keep that going. So just right here after this institutional candle, we knew that it wanted to get pushed downwards. So honestly, anytime targeting this previous day low from above is going to be a good entry. I mean, just based off of this candle body, that's 428. Here's 20 points. And then down to just like right here is going to be another 40 points. So that's a 70-point trade right here. If you're using it would be ridiculous if 70 points a day isn't enough for you to hit your profit. And then you can see here it starts moving up again. But again, here we see another bright red candle based off the volume delta for institutional volume, suggesting that it wants to go down below. Just wait for a recent high and short it again. So there's multiple different entries that you can see here. And this trend line that I drew actually ended up stayed pretty true for a good couple hours in Asia session. So honestly, shorts at any point in here, depending on how heavy you leveraged, like as long as you targeted this zone in here, you would have been fine. And once it gets towards London session, that's a whole different story, but we're kind of talking about how to get in and out of Asia session real quickly and real effectively. So a big thing here, again, I want to emphasize our points of interest are like target zones, not necessarily support or resistance, but it's going to be one or the other. Hard to say which one it'll be unless you look at a couple different things, but if we're looking at it quickly, we want to look at it effectively. You don't need it to go completely through there. You just need to get it close to it, and you'll be quite all right. And if it breaks through and goes in your perfect bias, that's awesome. You just move that, take profit, and you'll be fine. Trail that stop loss, stay winning. But that was Wednesday's trade with shorts right there. And now we'll go to Thursday. Oh, good thing I actually have my my trades that I took here. Yeah, nice. Oh, this is a beautiful setup here. That was a super easy day to trade. All right, so here we were very, very high above VWAP, which is our white line. We are very far above our orb range. This was a huge orb breakout day. Orb high was at $28,783. And then from there, we went all the way up to our previous day high, which was 1,000 points higher than that. And then we broke through there even higher, which was a ridiculous long day. So after a day like that, it's like, why would, like, it would be obscene to think of shorts. So there was no need to even consider that. After that ridiculous of a bullish day, we opened up Asia with the lime green candle, which we know as using the institutional flow indicator. Lime green is going to be our institutional volume, but this time it's going to be bullish. Pushing it upwards, it's meeting kind of that zone where New York closed at that range that it closed in. So after I saw a slight dip, I entered here on one of my accounts. Or I guess I'm trying to remember exactly because I can't look at my exact trades. We'll look at this one because you can actually see the full trade develop. But I might have not copy traded all my accounts together and entered separately on different accounts. Wish I could have that drawn a little bit better. But here you can see it wanted to push upwards, had a slight dip, and I was like, okay, so from here it's not going to drop lower than the bottom of the institutional candle. It wants to go upwards. We're going to enter long here. So I risked 10 points. So a lot of people say, Peter, how do you manage to hold on to such big contract sizes on like a $50,000 prop firm account? So I trade them incredibly aggressively. To me, that's the only thing that makes sense. I mean, these accounts cost very little to open up, and if you play them right, they're going to paying you a lot. So, sorry, I don't know why I brought us back to the most recent Friday close. But so here I saw a push down. I risked 10 points. If you have 2 NQ on 10 points, that's only a $400 loss. If you have a fresh funded account with Tradeify, $12.50 is your max loss. You can be wrong 3 times before you get locked out for the day. And I'll be damned if I'm wrong 3 times. Like, that's ridiculous. And then once you have your buffer, it's $2,000, where I'm not saying you should go ahead and lose $2K. But it's just saying, like, the kind of the leniency that you have with it. So here we go. We saw the dip here, entered long off of it. And then, again, right after it, we see here it pushes back up. We get a higher low. That's another great entry. Push back up that way. And you can see here again, I didn't even target previous day high. You can see I just targeted the area just below it, because who knows if it's going to break up, like 40 points and then crash back down. But I do know that it's going to target that zone. I mean, it ended up playing around here. So here there were some great breakouts that you could have taken advantage of if you were kind of sitting on scalping the charts. But again, like if you got out right here, that's only 15 minutes on the chart and you're done. You know what I mean? Like right here, it hit that second take profit range. That's at 6:15 p.m. EST. That's if you hopped on the charts right at Asia Open, that's 15 minutes right there. And the analysis was super simple. You look at the daily bias, it's pushing upwards. The opening candle, we see our institutional volume pushing it upwards, targeting this like point of interest, price of interest at previous day high, but not quite going to it. And right here, we squeeze out 50 to 40 points. You know, on one NQ, 50 points is your $1,000. Like, trading doesn't have to be difficult. You don't have to look at all these many different things. You just have to look at the right few things. If you're looking at the right things, you don't need to be looking at a lot of things. And then Friday, obviously, this was technically Friday's trading day because it was Thursday Asia session. So those are kind of like 3 examples that I wanted to show you guys. I've had a lot of people in the free Discord server asking me, Peter, how are you already done like 30 minutes into the session in Asia opening and you're done for the entire next day? I do like trading Asia a lot because of the freedom that it gives me that next day. I don't need to worry about New York Open. I don't need to worry about all these things. And then I have my automated trading bots that manage the live account during those periods anyways. So I get done in, maximum like 45 minutes as we saw. And it works. Look for those points of interest. Look at that daily bias. Look for the institutional volume. Make sure you're looking at the right points of interest. Like I like the previous day high, previous day low. Those have been huge, especially in the amount of volatility that we've had in this market. And then of course there's there's our standard deviations. But a lot of times this past week we've been looking at a lot of continuations. We're not looking for reversals as much. Intra-session, like within our sessions we're going to see a lot. So like here, I'm sure if you look at it on the 5-minute it'll be a little bit different, but here we range from the positive third standard deviation and range down to the positive second, which this right here, 554. That's like that's a 140 point range right here. So you can still scalp it and get these nice reversals in here, even though it's not like a full reversal, but it still went from one band to the other, which is one of our A+ setups. But with the continuations, it's just been so simple. There's such low risk involved. And again, like I risked 8 points on that trade and 10 points on that one. It's just too simple. I mean, you're not really risking very much and you're winning a lot. So we're looking at like 4R, nearly 5 RR on the one trade. It's a 4.66 and then it's a 5.73. So, I'd be damned if I wouldn't take like a 5 RR trade. Just remember, trading doesn't have to be difficult. You don't have to look at millions of different things, all these different indicators and such. You just need one good set of indicators that show you the few things that you really need. I like to look at the volume deltas. I like to look at the 15-minute orb range in New York. I like looking at previous day high, previous day low, and I like looking at the standard deviations from VWAP. I find these to be super important, super useful zones, and I think a lot of people have found a lot of success with that. We've had a lot of people pass their first evals with this indicator. We've had a lot of people get their first payouts with it as well. Super easy to learn, and we have a module that teaches how to do it, and we have videos like this, but that just actually break down the specific strategies with the indicator itself, learning how to use it. And then of course our private chats where I send out a bunch of signals as well, where you can see some of those signals I sent out on our TikTok page that I'll put in the description down below. I'll also put a link to our WAP shop where you can actually grab this indicator for yourself, and also our free Discord server where you can see all the stuff about me and join our community there. So I hope this video was a little bit useful to you, and you can kind of compare what you're doing, maybe what you didn't do great this week, or what you did better than me this week. I hope you did better than me. That'd be huge. And I hope you guys all enjoyed this video. If you did, make sure to subscribe, leave a like, comment, and I'll see you guys all next time. Thank you.